Hello guys. Hope you guys are doing great and hope you guys are doing amazing. All right, so I welcome you guys to this video. Yeah, so this is the second time I'm making this video. The first video I made, after publishing the video, I played the video. I discovered that the video had no sound. So it was like all the hours of work were just in a waste. And this is the second time I'm making this video. So if after publishing the video and if I play it and I discover that it has no sound again, well, it seems that the spirit doesn't want me to release this information to you all. So, but I will try. I just hope that this particular one, this second video I'm making, will have a sound and everything will go smoothly. Now I'm about to make a video that will be able to help you to make consistent and profitable trade. Okay, trading harmonic patterns and smart money concept. Now the problem has always been hearing the pattern has completed. How do I take this trade? How do I take this trade? The question has always been, how do I take this trade? I've been able to spot this harmonic setup, but how do I take this trade? How am I sure that this pattern is accurate? You don't need to be right, you don't need to be wrong. You just have to do the damn work. Okay? I won't be surprised if this video doesn't get enough views. But trust me, this video will make you shit full of money if you be able to apply whatever I'm going to tell you. You that is watching this video, if you can apply whatever I'm telling you, you are going to be able to time your entries and have more clarity to your entries and know what you are doing. Okay? So pay keen attention to whatever I'm going to say in this video. It is very important. You pay attention, you understand every details of what I'm saying. Now, as time goes on, you understand the reason why I trade harmonics and why I will encourage you to learn it and learn it very well. Okay. Now, this is my trading desk. I have my harmonic handbook here. Okay, you can see all the patterns are here. I have the handbook. I study every day. So if I look at the chart and be able to spot harmonic pattern right out of the bat, it's because I'm doing the study. It's because I'm studying the concept. If you join the community, if you join the mentorship, you'll be able to have access to this guide. See the harmonic handbook. I have it here. So if I'm looking at the chart and I'll be able to spot harmonic pattern, it's because of the fact that I've studied it and I keep studying it. You only get better at it if you keep studying. Nobody's going to do that for you. You have to do it for yourself. Okay, so it gets easier day by day if you can be able to study and study very well. Study the right things, and harmonic patterns study is good. It's good. Trust me, it is good. There is no way it's not going anywhere. It's going to continue to work, provided that the financial market exists. So all the time you're going to spend to learn it is not going to be in a waste. Yes. So in this video, I'm going to help you, a harmonic trader and a smart money concept, because we trade harmonics and we apply the concept of smart money to be able to time our entries. So this video is going to help you to be able to have a better entry. So that's why I encourage you to take whatever I'm going to say very serious. Listen and take it very serious. Don't joke with this information, because this video may not really be out to the public for a very long time. I might decide to pull it out or pull it out because of the information I'm going to release in this video. Okay, now we are trading reversals at DRZ. We are trading reversals at DRZ. Now I want to show you one singular thing you should be looking out for at your potential reversal zone to be able to take a trade. Now over here on the chart, this is a typical harmonic setup. Let me zoom in on this particular one. Okay, this is a typical harmonic setup. So at a potential reversal zone, I want you to look out for this type of W pattern. If you're trying to buy, look out for this type of W pattern on the chart. Okay, Let's zoom in on that W pattern very well so that I can be able to show you what I want you to look at for. I want you to look at for this type of W pattern if you're trying to buy. Merely the pattern complete. Please listen very well. Now, how do we determine that this particular leg is a displacement leg and not price coming into this level and then pushing all the way down again? How do we determine that? We use the Fibonacci extension tool. So we use the Fibonacci extension tool from the origin to this point back to the origin. We want to make sure that this extension leg, this displacement leg, this particular leg, this leg here, this movement is more than 1.272. Anything less than 1.272 is not a displacement and we should not be looking at for entry. Let me go back again. Don't worry, I'm going to go back again. Let me go back again. Sorry, I think I deleted something I don't want to delete. We want to look at for this type of W pattern on at the potential reversal zone. Immediately the pattern completes, probably you're able to spot the pattern on the 1 hour time frame, go down to the 15 minutes time frame, to the 30 minutes time frame to look at for this type of W pattern. Regardless of the time frame you spot the pattern, go down to the lower time frame to look at for this type of pattern on the chart. Look for W pattern at the potential reversal zone. This type of W pattern, it could be in this form. You will have a double bottom. It could also be in this form. If it's not in this form, it's in this form. So whichever one, we just want to see this kind of W pattern, okay? First of all, we need to verify that this leg is a displacement leg because we need this to be a displacement leg. The far it goes away from this level, the better. So all we have to do is to use the Fibonacci extension tool from the low to the high, back to the low. The essence of this is that we want to measure the rate of this displacement leg. We need to make sure that it's a displacement leg because oftentimes what price will do, price will come to this level, sweep this high. After sweeping this high, if you don't have access to this information right now, you will look out for buy from here. Meanwhile, price will continue to go down. So we wouldn't want that to happen. So all we need to make sure to mitigate that, we need to make sure that this displacement is more than 1.272. To add these values on the Fibonacci extension tool is very simple. Just double click on that. Then you add 1.272, 1.414, 1.618. We just need 1.272. We don't even need all the other information. If the retracement, if the displacement is more than 1.272, it is okay, it's fine. That is fine. So we have verified that. Now, how do we take our entry? To take our entry is very simple. We look for order block and fair value gap on this leg. Anywhere we see the order block, probably is here. We pick our entry from here. But ideally, we want to see that order block at this level. If we don't see any order block here, we'll use this demand level. This is called the demand level. This demand level becomes our entry. There is no fair value gap, there is no order block on this level. This demand level becomes our entry. Okay, and then we need to also watch price as price is retracing back into this level. Okay, as price is retracing back into this level, we watch to see how it will move. Sometimes price will just from this point retrace back. Sometimes price will just from this point, it will just retrace back a little bit into here and then push all the way up. So you have to monitor price. As price is retracing back, we'll look for that bullish movement to the upside, then we can pick our trade. But ideally, we need to look out for order block fair value gap on this level to look for what entry. Okay, so that is how we do it. And if you don't see it, we can as well use this level also. The last candle here, the body and the open and close of the candle to pick our entry. Let me go back again. Once I've gotten this W pattern, I'm spending much time here because of what I'm trying to explain. Once I've gotten this W pattern, we look for our entry. To get our entry is very simple. We can do 50% of this range from this high to this low. This is when we don't have order block fair value gap, but I know we're going to have an order block fair value gap on this level. So look out for it. If you don't have an order block fair value gap, you want to pick a pending, you want to use pending order. The last candle here, the last bearish candle here, that is your entry. but look for fair value gap and order block on this particular leg. You're going to see it, use it as your entry. It is just that simple. That is all. So what have I explained on this video? Look for W pattern if you're trying to buy at the potential reversal zone. Immediately your pattern complete, look for it on the lower time frame. Once I've gotten that, verify that this particular leg is a displacement leg using the Fibonacci extension tool. Then you have verified that, look for order block and fair value gap on this level, on this leg for your entry. That is all. And as price is retracing back, look to see where price will get to push to the upside. On the reverse side, if you're trying to sell, it's the same thing. We look out for M pattern at the potential reversal zone. Look out for this type of M pattern at the potential reversal zone. Then the pattern complete, we look to see if this particular leg is a displacement leg by using the Fibonacci extension tool. From the origin back to this point, back to the origin. Okay, we need to make sure that this is what's more than 1.272. Very important. Immediately I've gotten that, we look to see order block and fair value gap on this leg as our entry. And as price is tracing back, we also need to see where price will get to. Sometimes price will get to this level of support. It has broken this support now, so sometimes it's going to retest it as a resistance and then continue to push to the downside. So we have to monitor this. But once I've gotten this W pattern, we should be looking out for selling opportunity. This M pattern, we should be looking out for selling opportunity. W pattern at the potential reversal zone, buying opportunity. M pattern at the potential reversal zone, selling opportunity. And this could be in this form of M pattern. It could be this form. It could be this form. It could be this form. So we just need to make sure that it is M pattern. Now, the beauty of Harmonics is because of the fact that it works on all financial markets. I'm here on Tesla stocks. All this while it has been Forex, cryptocurrency, and all the rest of them. But this point is going to be on Tesla stocks. It's going to be on stocks. So let's see if this plays out on stocks. I'm here on Tesla stocks. You can see how the stock value is actually pushing all the way up. We'll have this valid bat pattern at 0.886. I don't need to measure that. It's actually very, very accurate. Now, let's see if we're going to see that kind of entry at this level. If we get that kind of entry at this level, we say we should look out for what? W pattern, right? So let's go down to the lower time frame. Okay. Even from the 4-hour time frame, I'm even seeing the W pattern also. But let's go down to the 1-hour time frame. You can see the pattern is even visible right here. So this is the W pattern. This is the W pattern. It could be from here, it could be from anywhere. W pattern. Now let's measure this leg to know if it's a displacement. I don't even need to measure it. You know that it's already a displacement. From the origin, this is the origin, back to this point, back to the origin. It's already more than 1.272, so it's valid. So how do you look out for entry? How do you look out for entry? You can see that this is an order block. So you can see that gap there. It's an order block. So this is the order block. So you can take this place as an entry. Now, if you have an order block here, and you have an order block here, this is called decisional entry. Decisional meaning that it's 50-50. It might or it may not work out. For instance, if you have an order block here, let's say this is an order block, it's 50-50. It may work or it may not work out. So it's called decisional entry. So you can see that price gave us a reaction, gave us some profit, and then fall back to this order block. This is an order block. And see there is a gap there. That gap made this level an order block. Okay. So this is decisional, which of course you need more confirmation to take the trade. So it's 50-50. Why this one is called a stream entry? A stream means that is the last point of mitigation. Okay. So this is the order block. Of course, for our stop loss level, we maintain 10% distance from the potential reversal zone, which is minus 0.1. For those of you in the academy, this is very simple. If you're in the academy and you're still having issue with placing your stop loss, always send me a message, I'll reply you. So we pick our entry from this extreme. Okay, stop loss anywhere around this level, which is beautiful, to allow price to move up and down, because you need to give price room for for price to move. That is the beauty of harmonics. Okay, so this is how much you've been able to make right now as price is pushing out. You have already made 2.3%, which is superb. Okay, now final target is at 0.618, which is around here, which will give us how many percent? 5.48%. We can still push to 0.786 depending on how price move. Now this has become simple and easy because you're able to spot W pattern and the potential reversal zone. It's just that simple. Okay, so like I said, this video is very powerful. Please watch it. Take everything I'm saying here very serious. Take every single thing I'm saying here very, very serious. Take it very serious, and it will definitely help you. It will definitely help you, okay? It will definitely help you. We'll have other patterns here in the past, which I don't really want to go into all of that. We'll have other patterns. So let's go to another stock. Let's go to another stock. Let's look at NVIDIA if we have anything there. Okay, we'll have this pattern here on NVIDIA. This should be on the weekly time frame. Let me just refresh that. Should be on daily. Good. This is a BAT pattern. This is a BAT pattern. Occurring at 0.886, this is 0.5. So this is a BAT pattern. So let me remove this. Okay. So this works on any market, works on any market. Stocks, indices, cryptocurrency, forex. So let's look at if you're able to get any kind of W pattern around here. Let's go down to the lower time frame. Let's go down to the lower time frame. Okay. So I'm already seeing the pattern as well. I'm already seeing the pattern. I'm already seeing the pattern. I'm already seeing the pattern. You can see this is the pattern here. It could be from this level. It could be from here. It could be from here. Okay. So measure to see if from the origin to this level back to this place is more than 1.72, so it is valid. So we look out for other block entry. You can see that this is we don't have in this is fair value gap. Of course, we can use this one as an entry, as an A stream, as the decision now. You can as well use this one as entry. You can see that was an order block there. Let me zoom in very well. Let me zoom in very well. You can see this is an order block. This is the order block. This candle is the order block. So you have to cover that gap because price might come, feed that gap and continue to move. So this is the order block, and this is also a fair value gap. You can use that as an entry as well. So why this one is decision now, the other one is extreme. So this is extreme because it's at the lowest point of mitigation. Okay, so did we get any reaction from the decision now? Yes, but later on price fell to the downside. Then reacted from what? Reacted from here. Reacted from here. Okay. Reacted from here. So that is that. Now, how do we take our stop loss and our take profit level? Okay, we use the SABCD tool. If I'm a little bit fast, please, you can rewatch the video. Just pause it and rewatch it. You'll be able to understand. Okay, so use the SABCD tool from A to D. Okay, we've already achieved first take profit level. So stop loss is around this level. Of course, we are not going to use 0.10% as stop loss because of where we pick the trade. We might use this level as stop loss, which is fine. So that this place can as well give us 1:1, which is okay. This one can give us 1:2, beautiful. And then this can give us 1:3. So can just adjust a little bit. Anywhere, just look at the price history. Anywhere below this level is fine. Anywhere below this point is okay. Okay. So this is final target 1:3, which is beautiful. So it occurs anywhere. All right. Then let's look at this one also. I think I'm also seeing another pattern as well. I'm also seeing another pattern here. I'm also seeing, but I need to verify to make sure that this is valid. Let me look at this one. To make sure that this one is also valid. Okay. It's not valid. Okay. It's not valid. Yeah. So let's look at other stocks. Let's look at Apple. Have I discussed about Apple? I'm not sure I've discussed about Apple stocks. So let's look at this one. I'm going to see if I'm going to look at for bearish opportunities. So I can show you guys an M pattern as well. Okay, let's go down to the lower time frame. Beautiful. You can see the W pattern was also there. You can see that the W pattern was there. Even on the lower time frame, 30 minutes time frame, it was also very visible. Very visible. Now, this time around, price did not come to the extreme, which is this one. That's why it's always good to pick two of them as level and see how price will react. So you can see that this is a W pattern here. Push all the way up, then came down to this place. You can even use this one also. So measure that to see if it is valid. From the origin back to this point, at previous points, it's more than 1.272, so it's valid. So maybe we'll get that. We can use this level as entry. That is the fair value gap. Can see a price came, fill that gap, and then push all the way up. Push all the way up. Okay. Push all the way up. Now something is, I don't want to complicate it. That is why I don't really want to, but let me just do it anyway. Now notice that whenever price, for instance, let's say we have a valid W pattern in this form. Now let's look at the extreme example. Okay, price will do something like this and then come back before pushing up. This is what we call inducement. This is what we call inducement. Okay, so this is what makes this other block you're seeing here valid for entry or ripe for entry. That means the other block is ripe for entry. Okay, so now this is the first instance. I'm gonna give a little gap here. The second instance is where we'll have it at the extreme. Okay, we'll have a valid W pattern. Okay, and we now have something like this at this extreme. So this is where we'll have the inducement, which is the liquidity point. So whatever other block fair value gap we are seeing here becomes good for entry. So that is what happened here. That was what happened here. Look closely, you see that this price came down here, pushed all the way up, came back for the second time. So whatever other block, anything we have here, made it this fair value gap here between this candle and this candle. This small gap there is the fair value gap, made it valid for entry. So that's why I say this video is very, very important. Very, very important. Very, very, very important. Please take whatever I'm saying here very serious. So since we had this inducement here, this point here, okay, so let me just screen this. Good. Now this becomes our entry point. Can place our stop loss anywhere around this level, so that if this fails, we can use, since there is no inducement on this extreme, that's why price didn't even come there. That's why price didn't come there. Okay, so we can use this as our entry, and then you can see what price did. It pushed all the way up, and it's pushing up right now. It's pushing up right now. Okay, so let's go down to the 4-hour time frame. The same target A to D. 0.786 final target. We're looking at 1:8% on this one. Okay. So let me put all of this one place. You see how your entry is becoming very simple now. Your entry is becoming very simple. Immediately your potential reversal zone, immediately your pattern completes, look out for M pattern, look out for W pattern and the potential reversal zone, and then take your entry. Good. This is the one I was looking at for. So this is for, let me remove all of this so I can be able to spot it ourselves. I'm able to spot it ourselves. Okay. We're able to spot it ourselves. Let's go. Let's go. So this is what we call deep crab. This is a deep crab. This retracement is at 0.886 and this extension is 1.618. Let's measure that also from this point down to this point. So this is 0.886 and this is 1.618. So this is a valid deep crab, right? That's why I said, even if I don't have this on the chart, if I see this type of price movement, my mind is already telling me, because of that extension, it could be a crab, it could be a deep crab, or it could be a butterfly, because I've studied it very well. This is my partner handbook. So all the values and all the figures are in my head, because this is what I've been studying for a very long time. So study, it will help you. For instance, you've made some profit from Forex. I want to push into cryptocurrency. It's the same strategy. You want to trade indices, you want to trade stocks. It's the same strategy. So study, print your handbook out and study this very well. Watch my videos. I'll keep releasing videos on entries and videos on, I'll be releasing videos on backtesting. I might pick a particular pair today and publish video on backtesting using harmonic patterns as harmonic concept. Watch it on my YouTube channel, be able to learn. So I'll be publishing videos of backtesting video. Like now I have a video on my channel. Now this is my channel, of course. This is my channel, DGREATFX. That's the channel. So I have a lot of videos here you can watch. This is a recent video, backtesting on US oil using the concept of harmonic and harmonic concept. I'm also going to release another video on backtesting on GDP USD using the concept. So I'll be releasing videos every time on the channel. So as you keep watching the videos and you go back and keep practicing, you'll be able to get used to it. All those profits will be yours. Okay. So I wish you guys all the best, right? So now that is the pattern we are looking at right here. So now let's look at this level to see if we're able to get that that W pattern. Let's go down to the lower time frame. That M pattern for sell. We can look at it very. We can see that the M pattern didn't actually occur at this level. It's occurred here. Look at it very well. Even on the 30 minutes time frame, you can even go down to the 15 minutes time frame, the same thing. So this is the M pattern from this level. It doesn't really matter where this one is coming from. This can be from here, can be from anywhere, but all we need to see is this one, and the displacement. So it doesn't really matter where that one is coming from, okay? And the displacement down to the last. So now, since we have gotten this M pattern, I don't even need to measure this one. It's already more than 1.272. This leg is already more than 1.272. I don't need to measure it, okay? So if the candles is very, very small on the lower time frame, you can go down to probably 1 hour time frame to look at it very well. All right. So where do we have order block, fair value gap here, and where do we have inducement here? Okay. Remember what I told you guys. Let me also draw it again. For the M pattern, I'm taking my time because I really want you guys to succeed. For the M pattern, this is for the M pattern now. It could be in this form. The M pattern have completed. But then where do we have an inducement? It depends. If price gave inducements before displacing, but I will assume, okay, price did not give any inducement. So on this leg, there is order block and fair value gap. There is there is fair value gap on this leg, there is another block on this leg. Now we have gotten the displacement, okay, and then price does something like this, continue to push all the way down. Now there is another block fair value gap here. Expect price to come back to this level, tap into the other block before pushing down. Let me push this a little bit. So expect price to come back to this level, and tap into this other block or fair value gap or whatsoever. You see here, fair value gap, other block, push down. Okay. Now, second one is where we have it at the extreme. We have this second one here. This is the M pattern, and then it completed. Price does something like this. Sometimes it doesn't even go far. It might even do something like this. It will come back again into this level before pushing down. So I want you to study these two things. This is the decisional, this is the extreme. So we'll have this, okay, and then it's the same thing. So it's the same, even if it's for sell or for buy. I'm going to flip it to the other side. You're going to see the same thing. Okay, so if I flip it, the same thing. Inducement is very important. So look out for where we'll have the inducement. Look out for where we'll have the inducement. Look out for where we'll do what? Where we'll have the inducement. In the inducement. That is the most important thing. That is the most important thing. That is the most important thing. That is the most important thing, okay? I hope you guys are understanding what I'm saying in this video. Please, back test, go back. You're going to see all of them on the chart. Go back and apply it on the chart. You're going to see everything playing out. So now, where do we have inducement on this leg? First of all, this is an order block. Map out all the order block. This one is the order block. You map it out. Is there inducement on this leg? No. This is a fair value gap also. So map it up and wait for price to react from there. But remember that we'll have this inducement here. Okay. And before that inducement, what do we have there? We'll have this fair value gap. From this point to the last part here is the fair value gap. So this is the inducement. That was where price came to. Price did not come to this level because there was no inducement here. But see where we had inducement and see where price came and fell to the downside. So please don't joke with this information. This is not going to be this video is not going to be on the website on the YouTube for a long time. I'm going to pull it down because it's worth thousands of dollars. You are finding clarity in the randomness and noise in the markets. You are looking for clarity. Market can move up and down, give different type of signal, different type of signature, different type of structure. But this is what you are looking at for. Because of what? This particular structure appears almost every time during reversal. So regardless of how price is printing different types of pattern or whatever price is printing, you are looking at for what? You are looking at for this type of what? This type of structure, this type of pattern. So price will do so many crazy things. It's not your business. That is why Harmonic will keep working, and it will keep working. Because of what? This pattern, price generates it every single time. If price wants to move from point A to point B, it will not just move straight to point B from point A. It will create different types of structure, different types of pattern. In all those structures and pattern price is creating, we are only looking at for harmonic setup. All those geometric shape, measured move, that's what you're looking at for. So you now have clarity regardless of the randomness of price. So please take whatever you're learning here very serious, especially this entry now. Especially this entry, go back to the chart and then go back and watch it, go back and watch it. I know sometimes it can be very, very tasking, it can be very, very demanding, but then go back to the chart, you'll be able to see all of this playing out. Okay, so this will bring us to the end, and most importantly, inducements. The concept of inducement is very simple. If you still have issue with inducement, keep watching my YouTube videos. I'll be publishing this video on my channel. Okay, keep watching my YouTube video, subscribe to my channel so that you'll be notified whenever I release backtesting video. Probably I might pick GU today to backtest. I might pick Tesla stock. I might pick gold. I might pick US oil. I might pick Euro USD. I might pick anything. I might pick cryptocurrency. So whatever pair I'm backtesting, you can be able to come back and watch it and understand more about inducement and more about M's and W patterns and more about harmonic patterns. Study. Look at my handbook. Look at my pattern handbook here. I'm not joking. This works. Crazy ROI. I'm not take whatever I'm dishing out here very serious. We are not here to joke. We are not here to play. Okay? This particular entry now will solve a lot of problems for you. Yes. So you pick your entry from that inducement. You just have to wait for price to give you a reaction. You can see price gave us reaction. He even gave us another M pattern there as well, but we are not looking to trade that. Even with that, you can see where the inducement is. This is where the inducement came. It seems this inducement works very well with stock market. This is where the inducement came. You can see made this level. We didn't have any inducement at this. That was where price didn't come to this other block. We had this M pattern also. You can see the M pattern here. Study, guys. Study. I wish you guys all the best. So I really wish you guys all the best. So once you have this reaction, wait for price to give you multiple reaction. You know, probably must have gotten in around this level. Let's say probably around here. Must have gotten around here. You can see that price is it's not trying to make a new high. This bullish candle was just an exhaustion candle. So you take your entry from there. Your stop loss, look at where we have resistance. You can just put your stop loss anywhere around this level, above this high. Above this high, it's a good place to place stop loss. So then let's look at targets. Okay. Ideally, we are targeting this low, which is around 0.786, but we can still measure that using the take profit levels from A to D. So from A to D. Beautiful. So this is where 0.7, and that's where price got before giving reaction to the upside. So this is how you look at for that type of entry. So this brings us to the end of this video. If after watching this video you still have issue, please let me know. Okay, let me know. But go and study, take everything serious. And if you want to join the academy, I'll post a link below this video. All my videos, I'll be posting the link to join the academy to learn all of this. I'll also be showing the academy websites during my subsequent videos. Okay, so I wish you guys all the best, and I wish you guys all the best. Have an amazing trading opportunity out there, and as you study and learn this concept, may it work for you, and may you be able to be profitable. Okay, I wish you all the best. Please subscribe to my channel so you can be able to learn and grow with me. So this will be all for now, guys, and then bye for now.